Good afternoon, Prashant Sharma, Chief Investment Officer with Max New York Life. He joins us live from New Delhi. Prashant, morning. Thank you for joining us. Prashant, how would you characterize the market environment? Looks like the momentum on the upside is missing, and the strength on the downside is also absent.
Hi, Nikunj. Thanks for having me. We have been fairly cautious on the markets for the last several months, quarters, in fact. Given the overall macroeconomic environment in India, I don't see there is a reason to kind of change our stance. We've been concerned about several things over the last few months, including slowing growth momentum, sticky inflation, high fiscal and current account deficits, which have made India reasonably vulnerable in case of a global risk aversion event. So having said that, I would say the fundamental triggers for the markets to move up significantly from these levels are missing, and the fact that the valuations are a lot reasonable compared to where India used to trade 3-4 years back. I think the downside at this moment is also kind of limited to a large extent. So I think it's becoming more and more a stock-specific market, wherein you'll have to pick and choose your stocks depending on how comfortable with you are on those stocks, given the valuations and the overall earnings visibility. But by and large, it's been a lackluster market, as you rightly said, over the last 30-40 days. My sense is what has happened is in the last month or so, the volumes have also dried up quite significantly. So I think markets are probably getting ready to make a decent move one way or the other. And given the overall economic environment in India and the fact that there is a possibility of a risk aversion even striking at some point in the global markets, I think Indian market could be vulnerable, and there could be some near-term downside as we move forward.
Hero Corp, the numbers came out in the dying minutes of trade and the stock price completely reversed its trend. What, according to you, was the biggest disappointment?
I would typically refrain from commenting on individual stocks, but we have been reasonably cautious on the two-wheeler market for a long time. I think it is one sector where competition is increasing. There is a possibility of a volume slowdown, and earnings growth may kind of lag the overall market over the next 1 or 2 years. So as a sector, two-wheeler is a sector which we would tend to avoid. In the overall auto space, we think the four-wheelers are far better placed compared to the two-wheeler space from both a medium-term as well as a long-term perspective.
At a time when you expect that in the near term, the global macro and local micro will be challenging, what's been your portfolio strategy? Are you chasing growth, or are you still hiding in defensives?
Well, we call it growth at reasonable prices, but by and large, we've been defensive in our portfolio construction. We've kept a little bit of cash. We are overweight defensive sectors like FMCG, Pharma, and telecom to some extent. But wherever, for example, there are stocks in the infrastructure, beaten down infrastructure sector, where we think the stocks are probably pricing in the worst case scenario, we are kind of selectively looking at those stocks also. So it's a mix of growth at reasonable prices and defensives. But by and large, if I take an overall portfolio call, I think we are probably expecting the markets to remain lackluster and probably see some downside in the next 3 to 6 months. So that's how the portfolio is positioned. We are happy with about 10% yield that the cash is earning in the meanwhile. So I think it's prudent to kind of allocate some portfolio to these high yielding cash and cash equivalents also. So from a portfolio perspective, I think we're probably sitting at around 8 to 10% cash, and the balance is in a mix of defensives and stock which are completely beaten down.
Pharma companies, or at least Indian pharma companies, they have the most risky business model. A, they are dependent on the whims and fancies of US FDA. B, they are completely dependent on how global generic prices will move. In such a global uncertain environment, why are pharma stocks strong?
Typically, some of these pharma companies also have strong domestic businesses. We are far more confident on companies which have a mix of both domestic as well and global businesses. Companies that are very, very strong in the domestic market, and there is a possible upside that can come from global markets. See, I think the reason why pharma stocks in India have been performing so well is primarily because of the same reason that I highlighted, the TINA factor. Given that most market participants want to position themselves defensively in an uncertain global market, and plus in India you have the significant risk of INR weakening. So most people are trying to play INR weakness through either the IT sector or through the pharma sector. And given an environment where IT sector has kind of to some extent got derated because of slowing growth, concerns in their own business models, I think pharma is a sector where people are finding a lot of comfort in terms of at least a growth visibility is concerned.
You mentioned that at Max New York you are negative on two-wheeler stocks, but what about four-wheeler stocks? Are you bullish on four-wheeler stocks?
Yes, we are. I think the penetration levels in India are very well known. I think this is a secular long-term story, and the valuations also are pretty reasonable in our view if we take a slightly longer-term view and want to ride the overall penetration story that can play out in the four-wheeler theme. So I think on a relative basis, yes, far more bullish on four-wheeler compared to two-wheeler. As a portfolio stance also, we are overweight on the four-wheeler sector in the overall portfolio.
Four-wheeler space, what are you hot on? Global passenger names, CV companies, or tractor makers?
I think by and large more domestic oriented. We prefer the companies which have exposure in four-wheelers such as cars as well as the tractor segment or the UV segment.